Later today, the Fed will be out with its highly anticipated policy decision. The market is most definitely on pins and needles ahead of this one. And a lot of the fallout we've been seeing in the lead up to the event risk has been all about expectations. The central bank will have no choice but to change its tune in the way of a move towards tapering. While we fully anticipate the Fed to keep with a cautious and accommodative message, the ongoing rise in inflation should be enough to force the central bank into needing to consider inflation as a risk that could prove more than just transitory. As far as things keeping the Fed on the side of accommodation go, the Fed will, however, have some things it can grasp onto. This includes a recent big miss on jobs data, ongoing COVID woes, and a recent softer than expected CPI print. As things stand, there is little argument around expectations the Fed will leave rates on hold and maintain asset purchases at today's meeting. The bigger question marks come around the topics of the timing of a taper and the dot plot. We think the Fed will probably keep with its line of cautious optimism, and we still don't think the Fed will be announcing a taper just yet, but it is possible the central bank makes enough of a gesture towards the start to a taper that it just might leave the market pricing in an announcement in November. Of course, even if this holds to be true, the Fed will make it abundantly clear that a taper should not be misconstrued as a rate hike, with plenty more time ahead before that happens. As far as the dot plot goes, the median expectation into the decision is for the first rate hike to come out in 2023. And so this is where we could see volatility today if in fact there is enough of a shift here whereby that median is bumped up into 2022. Another area where there could be attention is around the Fed adjustments to repo operations, though we think this will have less of an impact than the other mentioned factors. The bottom line here is to focus on any hint at the timing of a taper and any adjustments in the dot plot. If we see the Fed hinting at the possibility of a taper in November, and if we see the dot plot reflect a rate hike in 2022, we can expect more shakeup in financial markets, with stocks likely to come back under pressure and the US dollar bid up. If, on the other hand, there is no clear indication of the timing of a taper and the median dot plot still shows that first rate hike out in 2023, look for stocks to rebound sharply and for the US dollar to sell off.